Okay, now we're going to get into the wonderful world of petty cash. Talking about establishing a petty cash fund. Like, what in the heck is that? Why would we have one? Preparing a petty cash report, replenishing a petty cash fund. I remember my first accounting job, actually, my second accounting job was with in logging, Potlatch Corporation in St. Mary's, Idaho. And I remember in our vault, we had a little cash box, and that was our petty cash. And I was the one that was in charge of petty cash. So anything here, so here's a case where sometimes having cash available is more convenient than having checks or debit cards or whatever. Um, Invariably, a business has just these random transactions that come up. And just imagine you had a drawer full of cash that you were going to use for just stuff that came up. How would you keep track of that? How would you prevent stuff, dollar bills from just walking away, or people just taking money out and not recording it? So cash always has to be controlled, right? We've talked a lot about cash being controlled, and we'll talk more about that as well. But here's a situation where having cash available for just stuff that comes up might be a really good idea. And then what happens if you're short? Like you record your transactions, you end up being short or you end up being over. And if any of you have ever been like a cashier at like a restaurant or a store, you never want your till to be off, but you know it just about every time with all the transactions going on, it probably is going to be off. It's really hard to get all the way to the penny. If you got your till down to the penny, that's awesome. But you might be short for whatever reason. And then what happens? Does that get taken out of your paycheck? Do you have to fill out a report? Whatever. In this case, petty cash oftentimes ends up with more or less money than what we expected. Um, why would we ever use petty cash? I just jotted down some things. What if all of a sudden we've got to get something for the bathroom in the office? We got to get it now. Forget the debit card, whatever. Maybe the boss is away. He's got the debit card. Nobody's around. Hey, we got petty cash. Somebody run to the store, take a 20, run to the store and get some cleaning supplies. How about we decide that we have to stay late after work and there's about four of us there. And the boss said we have to get a project done. And he said, hey, if you guys stay late, you can have a delivery for pizza. Pay for the pizza with petty cash. A young man comes in, he plays for the Little League. He wants a donation, cash donation. Pay out of petty cash. Just all kinds of random stuff that might come up. And then a very large business might have several petty cash funds. And understand that petty cash is one of our asset accounts. It's obviously a cash account with a debit balance. All right, so kind of an introduction to petty cash. Establishing a petty cash fund. Petty cash is an amount of cash kept on hand and used for making small payments. Can we call that petty cash? And yeah, well, here we go with normal debit balance, petty cash. Credit decreases it. However, we're hardly ever going to make a transaction that would decrease petty cash. Once we establish a petty cash fund, it will maintain that balance in the general ledger until we decide to make the fund bigger. We don't ever actually decrease petty cash in the ledger. And this is going to be maybe a little bit confusing and kind of a little bit of semantics, so to speak. But here we go with a petty cash transaction. Let's see, wait a second. I'm going to go back up here. Hold on. I think I might. There we go. So here we have paid cash to establish a petty cash fund, check number 108. So we're going to establish the fund for the first time. We said we needed $100 for petty cash. This is like the only time we would be debiting or crediting petty cash is to set up the fund or to make it bigger. I don't know if we'd ever make it smaller. All right. Wait a second. Sorry about that. And we're crediting cash. We're taking cash out and we're creating a cash box for petty cash. We would journalize that like this, four-step process, the date, the amount of $100, general debit, petty cash. Understand, petty cash is different than regular cash. So number 3 would be entering the credit entry over there under cash and writing our source document, check number 8. The form of proof of petty cash is a petty cash slip. And this form needs to be filled out and probably left in the petty cash box. And no journal is made at the time. So we don't journalize and reduce the amount of petty cash in our general ledger. Once it's paid out, obviously once we pay petty cash out, the actual fund, the actual cash in our box decreases, but the amount of our general ledger does not. We will not reduce the amount petty cash on a general ledger, even if that fund is dwindling away as people use the petty cash up. But when it starts to get low, then it's time to replenish it. And of course, errors can be made along the way, and we're going to call that cash short and over, which will be an equity account. And we're going to assume it's going to be an expense because it's probably the overs will be, the unders, cash short and over. Cash short will be more frequent than cash over. If we have cash over, that means somebody's like putting money in or something or getting ripped off themselves. A petty cash on hand amount that is less than a recorded amount is called cash short. A petty cash on hand amount that is more than a recorded amount is cash over. And again, this will be in our equity area. When custodians prepares a petty cash report and the petty cash fund is to be replenished. Replenished means we're getting low on petty cash, the actual money that's in the box. We have a $100 fund that's dwindled down to like $15, and it's time to replenish that and get the actual cash amount in the box, the petty cash control box, back up to $100. So here we go with our petty cash report. Which I find on page 143 of the book. And we write the date and the custodian name. We write the fund total, which again, in the ledger will not change. We document a couple of items based on slips that are in the cash box on what that money was used for. We total the payments on hand. Our fund total minus the payments equals the recorded amount on hand. That's what we expect to find in the box. Then we record the actual amount in the box, count it all up. And the amount in the box is less than what we expected the recorded amount to be. We have cash short of $1. So not only do we have to replenish, in this case, $34 for our 2 entries, but we have $1 we can't really account for down here. Now, we've talked a lot about being exact. All right. So we're replenishing the account. We want to be exact, but in this case, we're off by $1. Is a business going to just like knock themselves out to try to find out, hey, where's that dollar? Who took the dollar? Where did it go? Is it really worth it or not? Probably isn't worth it. I've been in business situations where rather than going to all the effort of trying to get something balanced or try to find out every last single cent where it goes, we did what's called plugging. Plugging means you make it balanced, even though it might be a teeny bit off. There's times we do that and there's times that we don't. In this case, we're not really concerned with $1. And in business, we have this thing called materiality, which means, is something worth really tracking down? Is it really worth adjusting? Or, like I said, tracking down? No, it's not. We're not concerned about a dollar. We have bigger fish to fry in this business we're trying to run. Okay? That may come as a surprise to some of you because we've been talking about how exacting of a science accounting is. So when we replenish petty cash, the account title is cash short and over. Debited when cash is short. It has a normal balance because it's an expense account of a debit balance because we expect cash to be short more than it being over. When cash is short, it's debited. It's credited when cash is over. Understand the flip side of that entry will be some entry to cash. The account balance can either be a debit or a credit, but it's usually a debit, and we classify it as an expense area. Petty cash fund more likely to be short than over. Isn't that amazing how human nature would determine that? January 31, paid cash replenish the petty cash fund, $35, miscellaneous expense 20, advertising 14, cash short and over 10, check number 11. Now remember, the actual balance in the petty cash general ledger account has never changed. It will stay at $100. Even as the cash in the box dwindled, what we show on the ledger shows as $100. Like I said, it only changed if we decided to change the actual fund balance, make it bigger, whatever. No actual entry is made to petty cash, the general ledger account, when it is replenished. Now that we're replenishing the fund, we will debit the amounts of the accounts that were impacted with our various transactions. And then, I think we just mentioned this. Why does cash short increase the replenish amount? Well, for short, we got to make up for that in addition to the expenses that we pulled out of our petty cash fund, right? So it would look like this. First of all, we're debiting an expense, miscellaneous expense of $20, equity account. Debit is an increase side for the expense, which decreases equity. I keep having to repeat that. I want to make sure we understand that. Advertising expense is the same way. We're debiting it for 14. It's decreasing our equity account. It's increasing expenses, decreasing our equity. Cash short and over. In this case, we're short. So we're going to put $1 in there. It's going to show up as an expense in our equity area. Cash, $35 credit, where we're going to take $35 out of our checking account, whatever, and put the money, the 35 physical dollars, back into the cash box to replenish it. So the cash box will go back up to $100, which is what shows in the general ledger. And that will look like this. There's our petty cash report. And down here, we're journalizing. There's your date. Notice how they didn't put the month, of course it's row 10, they didn't put the month in. Miscellaneous expense, $20. Advertising expense, $14. Cash short and over, $1. And we put the credit amount on the first line, $35 reduction in cash. So we have 3 general debit entries offset by 1 credit entry. We want to make sure before we move on, the credit entries match, the debit entries match the credit entries. That's very important. Okay, there you go, petty cash. There's the date. There's our amounts, general debits. You can see where they came from our petty cash report, dropped into our ledger. Total cash payment, $35. $34 was for the expenses, $1 was what we were short on. Again, people make mistakes all the time. And our source document was check number 11. We probably went and cashed it at the bank, I suppose, to get that money back in the account. Why do businesses use petty cash funds? making small cash payments, which writing a check is not time or cost effective. Stuff just comes up, and it's more convenient to pull it out of the cash box and go, hey, here's a $5 or $10 transaction that we just pull out of petty cash. Why is cash rather than petty cash credited when the petty cash fund is replenished? Think about that. The check issued to replenish petty cash is a credit to cash and does not affect petty cash. The balance, again, in petty cash in the general ledger will remain the same until you decide to make the petty cash fund, the amount that we start out with in the cash box, larger. All right. Okay, let's go to MindTap. And I'm going to Working Papers 5.4. There's a terms review. Notice that, please. And I'm going to go to Work Together. I'm on page 143 of the book, which again in MindTap doesn't do you a whole lot of good. Here we go. We're preparing petty cash report for November 30th. Using the following information, amount in the fund is 200, and then we got petty cash slips, either a memorandum or a receipt or something. So we're going to come up here and say November 30th, 20 whatever, step 1. Custodian, we're going to use student signature as it says in the instructions. The fund total is given $200, what we have in our petty cash fund. And then we record the two items we entered. One was postage expense for 24. Another one was miscellaneous expense for 20. Total those up, $44. We're going to put that over in our replenish amount because we've got to get the cash back in the box for the $44 that we used for those expenses. Our recorded amount on hand is you can see where it says fund total. We subtract our payments equals recorded amount on hand. So 200 minus 44 is 156. And up here it says, oh, your actual cash on hand is 154. So we are short, if we take our recorded amount on hand minus our actual on hand, $2. We need to replenish that as well, $2. Total replenish amount is 44 plus 2. Now understand if it was cash over, we'd be saying minus 1, and replenish amount would be, say, minus 1. And maybe we only had to replenish it with $43 if we were over. We're hardly ever over. Seem to always be short. So we're going to end up with $46 that we need to replenish our fund with. Review my work. Looks good. Grade step 1. Petty cash report. I got check marks. I'm looking good. Next step. All right, now they're asking us to journalize this. Here's our petty cash report. Now notice it says journalize the transactions related to petty cash completed during November of the current year. Well, here are our transactions. Paid cash to establish a petty cash fund, $200, and paid cash to replenish the petty cash fund, 46. So the first one's pretty straightforward. November 1. We're going to establish petty cash fund, general debit of 200, cash credit 200. We're going to have a petty cash box. We're going to put the money in there, and that's what we're going to use for miscellaneous stuff. Document number check C64. So I just journalized the first one. The second one, we're going to journalize it from our petty cash report. Postage expense. This was on the 30th. Postage expense, $24. The other one was miscellaneous, right? Yeah. Miscellaneous expense, $20. General debit. And we also have another general debit of $2 cash short and over. $2. Cash credit. Now we're going to credit cash and replenish in our box. It's going to be a cash credit of 46. Notice that, very important, we did not journalize anything to petty cash. Petty cash, in theory, had a balance in the general ledger the entire time of $200. Even though we were taking money out of the box and spending it, we kept the balance on the general ledger at $200. We don't ever mess with that. When we replenish it, we take it out of cash, put it back in the box. At the end of the day, do our debits equal our credits? Debit 24 plus 20 plus 2 is 46. Credits 46. Let's make sure we put in our document number, which was check number 86. C86. And just a reminder, just inform, with a multi-line entry, we only have to put the date and the document number once. Okay, double check, looks good. I did everything they said. Great final step. I think I hit it out of the park. Thank you so much. So you're going to go on to the on your own activity for this lesson and complete the terms review for lesson 5.4. All righty. And I think we're good to go. So you're doing the on your own now, given the information listed. All right, take care. Enjoy your day. I gotta get back to my video.